Hello, ladies and gentlemen. Good morning to you all, and welcome to our midweek review of the going to be delving into the market to have a deep understanding into what market participants are thinking at this point in time, taking into consideration the fundamental factors and, of course, the technical expectations on the chart. And of course, most importantly, we're definitely going to be running through our performances so far for the week across the asset we are monitoring since the beginning of the week, which includes the US All Spot, where I personally had its TP target this morning, but price still continues to rise, and we hope that we will continue. We will look out for structural details that will help us to maximize the potential of the current bullish move. Then on the GBPUSD, we have struggled so far this week, which we will be looking into and see if how possible we could recoup the losses we incurred on that one. And of course, we are going to be delving into my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. So if you're a fan of any of these assets, that is the USOILSPOT, the GBPUSD, and the XAUUSD, you want to stay tuned in, as you do not want to miss out on the valuable ideas we will be deliberating on this morning. And for those of me for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. The Forex Morning Mastery is not a signal service platform, but instead an educational gather to have a deep understanding into the market and using that to become a better trader. So it happens 3 times in a week: Mondays, Wednesdays, and of course Fridays. That's around 9:30 a.m. West African time and 8:30 a.m. UTC. So once again, I welcome you on board and encourage you to actively engage in the comment section. All right, so with that being said, I see your comment here at Demora Chica. Chica, how are you doing this morning? Happy New Year to you too. Thank you very much. And Chica is asking, how can I get in touch? Oh, all right, sure, you can. I think my email is in the comment section. Sorry, in the description box below. Please check it out. NavanaConsult at AOL.com, or you can also get me at sheriff.daramola at outlook.com. And you can also contact me directly on my Telegram platform, Master Sheriff Daramola. You can get in touch with me there on the Telegram platform, which is more or less a quicker way to get in touch with me. So you're welcome, Chica. Glad to have you around. And before I go into the details, let's ensure to make support the community by clicking on that like button. Please do so. It's a one way you inspire me to continue to do more of this, and secondly, it's another avenue to help you push this video to a wider audience of traders who may find this content beneficial to them. So with that said, here we will be diving right into the business, and as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the markets today. And and for the later part of the week. All right. So hold on a second. What's happening here? Okay. So we shall be looking at the economic calendar, and by doing this, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. And based on the asset we are monitoring for this week, we have been focusing on high impactful event from both the United States and the United Kingdom economic docket. However, despite the busy week, we do not have any high impactful event from the UK. So what I will do now is to include the mid-tier economic features, as there are some features from the UK which also has influenced the pound sterling immensely, which we also want to get into. So I don't know why my loading is taking a while, so let's give it a couple of seconds, I guess, for it to load up while I try to sort out my screen here. Okay, here we go. So okay, so here we are. So far this week, we've had on Monday, January 6th, we did not have any high impactful event, but I told us that we will be looking at two events. That is the Fed Cook speech, which came in PM UTC on Monday, and then we also looked at the S&P Global Composite PMI, which obviously came in above 50, which is the neutral mark, showing that there was an expansion, but not as much as the previous month, which came in at 56.6. Then yesterday, Tuesday, January 7th, we had a couple of events. We had one from the United Kingdom, that is the BRC like-for-like retail sales data, a data that gives us an insight into the retail sector, the transaction in the retail sector, and surprisingly, we had a 3.1% increase compared to the previous month, which came in at a deficit of 3.4, whooping figure. And we saw how this influenced the pound sterling temporarily for a while before it started finding lower lows and lower highs in the last 18 hours. So we are going to be looking at the implication of this in that market. And we also were looking forward to the ISM Services PMI, a data that gives us an insight into how well the service sector in the United States is doing. And of course, we saw a 54.1, a little bit higher than what market had expected, showing us how resilient the US economy is at this point in time. Then there's the job openings, a labor-oriented data which gives us an insight into how well the labor sector is doing at the moment. And of course, figures are doing very well from the labor sector, as we saw a 8.098 million expansion as against the expectations of 7.7 million. So these are quite very good data from the United States, which definitely has been bolstering the US dollar in the last 24 hours. Now, going into today's trading session, that is Wednesday, January 8th, we have a couple of high impactful events from the United States economic docket. The first one on the list here is a labor-oriented data, that is the ADP employment change, and this data here is coming in what time? 15 p.m. UTC. That's about 2:15 p.m. local time. And for those who do not know, the ADP employment change is a monthly economic report that provides the number of new jobs added in the United States sector. And it's also seen as a preview of the official jobs report, and strong numbers in this data can boost the US dollar as they signal a healthy economy, while weak numbers might put pressure on the US dollar by suggesting slower growth. Now, if we look at the data from last month, that is the month of November, it came in at 146,000. And at the moment, economists and market participants are projecting 140,000, which is a little bit lower than the previous month data. So we look forward to see if this data will come in just as market had expected, low expectations, or even beyond market expectations. So we want to be looking forward to this data, 1:15 p.m. UTC. Then later on today, we will be looking at a speech from Wala about 15 minutes after that. And then we also have another job labor oriented data, the initial jobless claim count, which gives us an insight into the number of people filing first time claims for state unemployment insurance. Now, in this data here, if the figures comes in larger than what market had expected, it will indicate weakness in the US labor market, and definitely it will rub off negatively on the US dollar. But if the data comes in lower, then this will be a positive signal for the US dollar. And if we look at what the expectations are, we are seeing a 218,000 as against the previous month, which came in at 211,000. So economists are projecting that unemployment had increased in the last 30 days. So we look forward to see what the actual data is going to be on that one too. Then later on today, about 7 p.m. UTC, that's about 10 hours from now, 10 to 11 hours from now, we are looking forward to the publication of the FOMC meeting minutes, which is also considered to be a key data everyone will be looking forward to, as it provides records of the discussions and decisions made by the Federal Reserve officials during their last meeting. It will be providing to what the views of the Federal Reserve are on the US economy and future monetary policy decisions, which definitely will give major key players in the market clues on how they will be positioning themselves ahead of the next upcoming interest rate decision. So another event right here we do want to be marking down on our calendar. So please, we want to be doing that right here. So we are looking forward to four impactful events today: the ADP employment change speech from Fed official. We also have the initial jobless claims count, and of course the publication of the FOMC meeting minutes. So these are major events to look out for, and the anticipation of such events definitely has its own way of influencing how market participants will behave. And of course, what we are going to be doing today is to try to understand this behavioral pattern using structural details on the charts to strategically position ourselves for the next move. So with that being said here, we will be moving right into the business. I see you, C40. Good morning to you. Happy New Year to you too. Glad to have you around with us this morning. So we shall be moving right into the business, and our first asset is the USOILSPOT, which has done tremendously well since the beginning of the week. Though we had some sell signals at the beginning of the week, which closed at break even, as you will see if you look right down at the bottom of your screen where my trading panel is. You will see we had about three trades on the USOILSPOT, one of which hit my TP target at 74.3 yesterday with over pips. And then we had a couple of sell positions which closed. Okay, one closed at break even. Then we had another buy which closed at a loss. So at the end of the day, we were able to, we are still on the positive side of our portfolio on this particular asset. So let's look at what our expectations were at the beginning of the week and how the market did go through, so that we can also keep those who missed out on that session in the picture. So at the beginning of the week, we had a situation here where price action was initially confined within the $73.85 level and the $73.40 level. So before I go in here, yesterday was quite a busy day for me as I wasn't most of the time on my screen. I had to do some family run-ins, and as a result of that I missed some trades, which I'll be explaining to you what happened when we get there. So we had the situation here where price was confined within the range, and of course during our live session yesterday we already saw price break down the support line where we were looking out for price coming back, give us signs of selling pressure to continue a decline. Obviously this never happened, and if you remember vividly, we talked about if price broke out of the resistant line we will be buying. I actually bought, and look at what happened here. Price did move about is it about 50 pips here around. I should have moved my stop losses to break even, so I missed out on that one and price took me out of that buy position in a loss. I don't know what happened on your own end. If you did move your stop losses accordingly, well done and kudos to you. Now, the sell position for yesterday started here at this, sorry, on Monday, started at this on the 3.1. Price moved about 40 pips, moved my stop loss to break even, and we got taken out of that position. And for those of you who are following me on my Telegram platform, remember I updated us with a new entry point around the $73.10 level, which you yesterday's session, and look at how price broke out of that structure about a couple of hours into the New York session, and ever since then price had continued to move higher. So I placed my TP target at the $74.30 level, as sorry, 73.4, I guess 73.4, somewhere around here, because I was going out yesterday and I didn't want to keep my positions open because we can tell what will happen around that area. And by the time I came back, price action had already moved past this area. It's the TP target, and in fact this was where our second buy entry supposed to have been triggered from. I do hope you took advantage of it. If you did, as we illustrated in the commentary yesterday morning, well done and kudos to you. So if you still have your buy position active at this point in time, I will be suggesting that you move all stop losses. Let's secure the current buy position, as anything could happen from this particular point. So I will suggest that anywhere around the $74.20 level seems reasonable to put all stop losses to at this point in time, while we give enough breathing space for price action to move around. Now, with a well-secured position at this juncture, what is going to be our plans for today? Are we going to continue to hold on to this bullish traction, or are there any chances that sellers could come into the picture, pushing price to the downside, or a reflection of profit-taking activities ahead of the major event we are looking forward to today and the later part of the week? Now, for us to have a deeper understanding into how it is appropriate that we take a closer look at the fundamental drivers, the fundamental factors that is influencing how the market participants in the oil market have behaved. The current bullish momentum in oil prices are currently influenced by a mix of improved demand prospect, which was reflected from the API report that came in yesterday, where we saw a larger than expected drop in US crude oil inventory. In fact, the API report showed a significant decline of 4 million barrels in the US crude stock for last week, far exceeding the market consensus 250,000 barrel decrease. Now, for those of you who have been with me for a while, we all understand the theoretical implication of what this means. Now, let me simply explain from a clearer perspective. Now, when the crude oil stock reduces, what this simply means is that the demand in the market was way higher than the supply. Now, for market forces to meet the demand in the market, they had to go into their reserves to take some of this commodity and push into the market. So as a result, we saw a 4 million barrel decline in crude stock. And what this simply means from our simple economics is that demand has actually increased. And when demand increases, what happens? Price will definitely rise. Now, this is one of the major reasons why we see this sudden increase in crude oil prices. Though risk still tied to broader market trend, and the US dollar still remains a significant factor in driving prices in this market. Remember, this is a US dollar denominated asset, and currently the US dollar is doing very, very well. And if it continues and the dollar continues to rise, then crude oil will become very expensive for other currencies to buy, and this could limit or cap the uptrend scenario. So it is very, very important that we move all stop losses and secure these current positions. Now, another factor that could influence the uptrend scenario here is the escalating tensions in the Middle East and the ongoing Russian-Ukraine conflict, which definitely will be supporting the bullish sentiment, at least in the meantime. Then we also talked about the implication of the China stimulus, which is still what majority are still banking on as a platform to push price higher, as China continues to do reforms that will boost domestic demand and enhance openness, signaling an improved economic activity in China. Remember, China is the world's second largest economy and the largest importer of crude oil. And if that economy is perceived to be doing very well, it will definitely increase the demand for this commodity. Now, in as much as based on what we have talked about so far, the path of least resistance for the crude oil remains to the upside, but we will not ignore the possibility that sellers can also come into play. Now, if we look at this chart from a long-term perspective, for those of you who are part of the Monday session, let me bring out the 4 hours time frame. I just want us to so that we can all be on the same page. So hold on a second. Let's look at the 4 hours time frame here. So this is the 4 hours time frame, which is still loading at the moment. Let's give it some time. I don't know why that is. So if you look at the 4 hours time frame here, or from a long-term perspective, the primary trend still low. Now, despite short-term gains, the broader trend for oil prices remains up to the downside, as highlighted by this structure you see on the chart here. So we need to be very careful, as we never can tell. The bullish pressure may get to a point where it will reverse and selling pressure could increase. And in fact, if we consider the upcoming US employment data and the FOMC minutes, which could strengthen the US dollar, there could be potential pressure on oil prices in that regard. So we need to be very, very careful at this juncture. So appropriately, if you still have your buy positions running, please move and secure the current buy position. Now, with this understanding in mind, how do we navigate the structure today? So we have another structure which has been broken this morning. Look at this structure here. This was initially the highest point price action has been for this week. That is the $74.35 level. Let me mark this out appropriately. So we have the $74.35 level right here. And this was actually the highest point price action got to on Monday. Now, what we are seeing right now is price breaking out of that structure, which for me is a very, very good sign for buyers. Now, for those who had missed out on this one, I personally would want to see price drop back into the structure to come and give me a confirmation in the form of a retest, where continued buy pressure here will be a good opportunity for me to continue the uptrend move. So that is what I will be looking at to continue a bullish momentum. So I would not place a buy limit here yet, but instead what I will do now is to place an alert around this area. So let me just place an alert here, so it will inform me to get ready to buy. So I will say get ready to buy. So if price gets into that structure, I will be alerted, notified, and I will monitor price action around that area. All I want to see is persistent buy pressure, showing us signs that sellers are finding it difficult to continue to the downside. Then I will join a buy move. Of course, I will be updating us on my Telegram platform. But if instead price continues to find selling pressure below the $74.35 level, that is, buyers are finding it difficult to climb back up, it will be a good opportunity to join a sell, where we could have our TP targets along this ascending trend line. Remember, we had this ascending trend line. Remember this trend line here from the 4 hours time frame, which has been holding buy pressure. So placing a TP target for the sell around the $72.50 or $73 area is looking promising. So we are looking at a minimum of 110 to a maximum of 160 to catch there if selling pressure persists below the $74.35 level. So in short, for today, our center of focus will be around the $74.35 level if price action ever comes into that structure. So let's mark out those levels on our chart, as we will be needing it as a reference point to guide our trading decisions for today. Now, if price does not come back down into the structure and continues to climb up, what are we going to be doing then? Well, the $74 area, $74.60 level, which is now the highest point where we've seen price, could be an avenue to continue an uptrend move. So we have the $74.60 level, right? So what I will do now is place a buy stop order above the structure. Hold on a second, I'm trying to copy the price from that area. So I would like to place a buy stop order above the structure. I'll do that right away. You will see it reflect at the bottom of my screen right now, and then have my stop loss somewhere around below the $74.35 level. So let's put at $74.30 level. And where will my TP target be? So one thing about TP target is I may adjust it again, but in the meantime, where is it likely for this TP target to be? So let's scale up into the 4 hours time frame. If we can identify a major supply niche in the past, so if there is any, or a psychological, okay, so we have something around the 77 78 area. Let me look at what 77 is. 77 is about 77 in the meantime, and let's see what happens from there, if price will ever get into that structure. So we have that 77 TP target. So the details are right there at the bottom of my screen. So this is my simple view on the USOILSPOT for today's trading session. I do hope I made myself very clear. However, if you have any questions or need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list for today. Stay tuned in. All right, everyone. I see a couple of comments responded to you. Chika, I will say she did not see my Telegram channel. I'm sorry, it's supposed to be trading with Sheriff Daramola. So I just sent you the username of my channel right there. Is that what you were asking me, or oh, I think you were asking me about how to contact me, right? I guess that's okay. All right. So, to contact me, type in Ask Master Sheriff. Ask Master Sheriff Daramola. So let me just type it in there and so that is my contact on Telegram. Ask Master Sheriff Daramola on Telegram. All right. Sorry for that. Okay, C40 says that info on your open trade is very useful and it offers great. All right, okay, you're welcome. Thank you for that feedback. We just decided to include that into it for this year so that we can all go through the challenges and the success together as we continue to monitor price action. So I'm glad you found that useful. I see you, Okidwayana. Good morning to you too. Glad to have you around with us this morning. Happy New Year. How are you doing today? All right. So, in the absence of no questions, I want to assume that we are all on the same page and permit me to move on to the next asset on our watch list for today. Stay tuned in. So the next asset we are looking at is the GBPUSD, that is the US dollar. And in fact, the portfolio on the GBPUSD is not doing very well this week. And in fact, we are trying to see if we can break even on this particular asset. I recorded a couple of losses in the last 2 days on this asset where I bought, it went into a loss, I think, I guess. And at the moment, the British pounds remains under pressure as risk sentiment and the US dollar strength dominates the narrative in this market. And with limited domestic catalysts from the United Kingdom, like we don't have any major high impactful event from the UK to support the pound sterling, I think at this juncture the path of least resistance seems to be to the downside. But before we go into the fundamental factor that is driving this market, let's take a rewind and look back at how the week started, what our plans were, and how we said we will be jumping into a position on this one. Now, the first thing here is the fact that we had our key level for the new week at the 1.2500 area. And you know how we use our key levels, of course. It serves as a factor that tells us whether to maintain a bullish bias or a bearish bias. Now, if price remains above our key level, we look out for buying ideas. But if price remains below the key level, we want to be looking out for selling ideas. Now, besides the key level, the first thing we observed on this chart after taking into account the character of price action since the beginning of the year was the fact that price action has been finding higher lows in place. We were able to construct an ascending trend line to buttress the bullish momentum. And of course, the new week started with a range bound structure which lasted for about 1, 2, 3 hours before breaking out of the structure to continue the uptrend scenario. Unfortunately, I missed out on this one as this whole breakout of structure happened during the Asian session on Monday, and this time is midnight on my own hand here, so I was still asleep when this whole situation happened, so I missed out on that move. And session on Monday, I was telling us that we will be looking forward to see how the market will react to this confluence. Remember, we talked about a descending trend line on the higher time frame. This descending trend line here, which interestingly lines up with the key level at the 1.2. I placed a sell limit order around that area, which unfortunately did not do very well. So that was where I recorded the GBPUSD. And during yesterday's session, I updated us with a new structure after noticing that the key level became a platform for buyers throughout Monday's trading session. And as a result, I was saying in my commentary yesterday that we will be buying the breakout of the maintaining a bullish bias from that particular area. And look at what happened here. Like I did tell you yesterday, I was out of my workstation, so I was not around to monitor and monitor my trades, that is move my stop losses accordingly, as we saw price move about how many, which is quite enough for me to move my stop losses. So I didn't do that. We saw price climb up, come back down, take me out of that buy position in a loss. But if you were around to monitor your trades and you were able to lock in your position, the worst case scenario would have been at break even. So well done and kudos to you. Now, this morning I was able to enter a sell trade after looking at a new structure. I will be explaining that to you in a moment. You can see it reflect at the bottom of my screen. I have a trade running on the GBPUSD, which is currently running with about a strong 3.1% growth for the month of December, indicating resilience in consumer spending. But of course, this was not strong enough to maintain the trend. The buy pressure lose momentum along the line as price dropped significantly to the downside. In fact, it also broke down this major ascending trend line we marked out yesterday. And why is this happening? Well, the risk aversion sentiment. At the moment, there is a fresh wave of risk-off sentiment driven by yesterday's US PMI data, which showed a very good figure, and that's weighed really really hard on the pound sterling. Then we also have the reduced expected. Remember, we talked about how the US economic data dampened hopes of early interest rate cut in 2025. The narrative interest rate will be the number of times they will cut interest rate next year will be reduced, and for us that's a very positive signal for the US dollar. And with that on play on the table, I don't see how the pound sterling can take advantage of this, at least in the meantime. And if we also look at the lack of any significant UK's economic data on the economic calendar for this week, the pound sterling is looking vulnerable from the US economic calendar. This week is jam-packed with a lot of events. Let me show you again. So today we are looking at the ADP employment change, the initial jobless claim count, the FOMC. Tomorrow is a bunch of speeches. On Friday, the average hourly payroll report, and of course the Michigan Consumer Sentiment Index, all of which have been from the United States. Though the absence of any significant data from the United Kingdom may really weigh on the British pounds today. Now, how do we navigate this market today? So what I did now was to identify a structure. In fact, we have a simple trading setup on the fifth show you. My chart is taking some time. I guess my network isn't that strong this morning, I wonder. So right here on the 15 minutes time frame, this was what I was able to come up with, and this led to the sell position you see currently running on my trading panel right at the bottom of my screen. So, okay, look at what we have here. So after taking into account the character of price action since yesterday morning, obviously the market has been bearish, and this trend line here further emphasizes that, as you will see here. And I sold the GBP USD. What price level was that again? Let's look at it. 1.24625. That's around 1.24625. Not too far away. So this was right where I sold the GBP USD, and currently it's running with about 15 pips, as you will see. So if you at any point in time sold the GBP USD at this point, I would just advise that you move your stop losses, secure the position, which I am doing right away, and I will tell you why I'm doing that in a moment. So I already moved my stop losses accordingly to secure that position, and the why I have moved my stop losses is this. Now look at that trend line there. Look at this trend line. You saw how price broke out of the structure during the Asian session this morning, and from a technical standpoint, we expect that as soon as price break out of a structure like this, we expect at some point in time price is likely going to continue an uptrend scenario. Now look at what has been going on here in the last 30 to 45 minutes. Price has been oscillating around the trend line, continue to find buy pressure. You can see we have a doji candle here, we had an engulfing candle, we had the bullish candle here, and this candle here, which is about to close in 40 seconds from now, appears to be evolving into a hammer candle structure, which could incite buying ideas from here. So that is why I said if you have a sell position on the GBPUSD at the moment, kindly move all stop losses, secure this current sell position, which I have also done on my platform here. Now we shall continue to monitor price action around this area. So we want to have another support line here which falls exactly at 1.200 area, a very solid psychological level. So we have the 1.24400 level right here, as you will see. Let's put it right there. And then I want to be seeing a breakdown of the structure for me to sell sincerely. So I will place a sell stop order right away at this point. And let's see. So let me 24396. Okay. So I'm placing a sell stop order right below that structure. And then where will our stop losses be? We do want to be given enough breathing space, so we give it at 2.27, 1.247 will be just fine. 1.247. So here we go. So we have a sell stop order below that structure. Now we explain why that is. Now we have a confluence between the one with around this descending trend line, which lines up with that 1.2440, which is our new negating selling attempt around this area. Now, if this level can get broken to the downside, I'm of the opinion, and considering the fundamental factors we just talked about, which favors the US dollar, I'm of the opinion that price will continue to the downside from here. Now, if that is not the case at the moment and instead price climbs up a little bit, it could come back into the 1.24750. Now, remember, this is a structure that was broken earlier today, about an hour or two ago. It's a key structure as well. Price may come back, and if I see selling pressure around this area, I would want to join the downtrend scenario. But if price can level, I will start considering buying the GBPUSD. But I would like to see buy pressure evolve around this area, showing me signs that sellers have lost the momentum before I continue the uptrend move. So if I'm looking at buying the GBPUSD at this point, I want to see price breakout, retest the 1.24750 before considering buying this asset at this point. So let's see how the market will play out around this area. We'll definitely be updating us on my Telegram platform as we continue to monitor price action around this area. So this is my simple view on the GBPUSD. A simple trading setup. We have a strong bearish perspective on this one after taking into account the technical factors and of course the fundamental factors, which is currently favoring the US dollar. We have a wave of risk off sentiment at the moment, driven by the US PMI data that came in yesterday. I hope we all remember here the PMI data came in at 54.1, as you will see, way higher than market expected, and this is continuing to support the US dollar at least ahead of today's event. So let's see what happens, and I will always be giving us updates on my Telegram platform. So if you have any questions whatsoever, feel free to let me know in the comment. The next 10-15 seconds to see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys, and do not forget to support the channel by giving that video a thumbs up, and thank you very much as you do so. All right. Okay, Dwyana, you're welcome back again. Thanks for the support. Shna Naidu, namaste to you, namaskaram. I'm very well, thank you very much. Okay, all right. I'm glad you found it explanatory. All right, so in the absence of no questions, I want to assume that we are all on the same page I hope you've marked out the structures accordingly on your chart, needing them as a independent trading decisions for today. So with that said, we shall be moving right into the final asset on our watch list for today. Stay tuned in, guys. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And we've had some interesting experience so far on this asset, though initially at the beginning of the week I had my buy position 8 stop loss, and that reflects right here on the account history. I think they won down here, which closed at 2,640 after we had the buy position triggered, which unfortunately took us out in a loss right here on Monday. And yesterday I did updated us with a new structure which supported a bullish idea, and in fact I placed my TP target far away around the 2,670. And like I did say earlier, I was out of my workstation and I wasn't around to manage that trade. We saw price move over 200 pips before that massive decline happened yesterday following the US PMI data, which came in favor of the US dollar. So I wasn't able to move my stop losses. If I had done so, I would have moved it to around the 150 pips profit mark. But all well and good. Today we see that gold attracted some deep buying following that pullback from the 2,665 area, but it appears that this is lacking some follow or bullish conviction at this point in time. So if I do the visual representation here, you will see that after that pullback from that 2,665, we had noticed that the last 15 to 18 hours have shown some lackluster in the movement of buyers. Look promising at this point in time. So if you still have your buy position running at this point, I will suggest moving all stop losses to that area around the 2,650, which is what I will be doing right now as price struggles to gain any traction from this particular area. So move your stop losses accordingly, guys, if you still have your buy position running. And for those of you who are around to manage this position effectively yesterday, scoping in maximum profit on this one, well done and kudos to you. But if you are not around, you left your position running like me, you will currently be running with about 120 pips at this point in time. So just move your stop losses. Let's secure this position as price still maintains its momentum line. And of course, you know how we use our trend lines. We want to continue to maintain that bullish bias as long as price remains above it. Now, with a well secured position, what are the chances that this uptrend will continue today, especially when we are seeing very good figures from the United States? We saw the PMI data from yesterday showing figures. We saw the JOLTS reports, which also showed very good figures reflecting that the labor sector in the United States is doing very well. And this, of course, has gone ahead to favor the US Treasury bond yield by these figures, and of course, expectations of fewer federal rate cuts for 2025. And this theoretically reduces the appeal for non yielding assets like gold. And this anticipation of slower rate cuts in 2025 may fuel bullish sentiment around the US dollar. So we need to be very, very careful around this particular area, as we may see very possible. And I strongly believe that major key players in the market will be stepping aside from this market, waiting for these data to come in before making any aggressive bets. Remember, I told us all we are looking forward to the non-farm payroll on Friday. We are looking forward to the ADP employment change. We are looking forward to the FOMC meeting minutes and the average hourly earnings on Friday too as well. So all of these are major key events that no one wants to be trading the market while majority are expecting these figures. And this is further reflected on the chart with this extended sideways trading activities after we are in an indecisive phase right now. So I reiterate, please move all stop losses and secure the current buy position if you are in any. Now, after talking about the influence of the US dollar, does it really mean that the gold does not have any chances to thrive from this platform? Well, technically speaking, we have price sitting on an ascending trend line, and you know how we use that. We will continue to maintain a bullish bias as long as price remains above that structure. We still have other influences from fundamental perspective. That is the geopolitical tensions, heightened fears surrounding Trump's tariffs plan is still there. We also have potential military intervention in Gaza. Trade war risk also will be creating demand for gold as a safe haven asset. And we also have the cautious activity ahead of the FOMC meeting minutes and broader, which could still provide some support for the gold commodity. Now, from what we have said so far, you can see that the performance of gold will remain tied to the play between safe haven demand from geopolitical risk and pressure from dollar and US Treasury bond yield. Now, how is the market digesting this information? Is there a clear path giving us a clue of what may likely happen? So after monitoring price action for the last 24 hours, I was able to identify a simple trading setup to prepare ourselves for today's trading session right here on the I will go right down into the 15 minutes time frame, and this is what I am looking at the moment. I hope you've moved your stop losses on the XAUUSD. Please do if you are yet to do so. So this is what I have on the XAUUSD 15 minutes time frame, a structure which looks similar to that which we saw on the GBPUSD. First of all, since price got into the 2000 area, we have seen price find lower highs, and if we connect the pivot highs, you can see we have this beautiful descending trend line which price respected until it was broken about 3 to 4 hours ago. Now, with the situation we have here, price is back into this resistant line, a line which has been holding selling pressure, negating all attempts by buyers to break out of that structure. Now, price is back into the structure, as you will see here. The last 45 minutes have shown that sellers are still present around this area. Now, the question here is, will price break out the structure to continue the uptrend move, or will selling pressure persist here to incite a massive move back into that temporary demand zone I have identified between the 2006 646, which may dovetail to a minimum of 70-80 pips to a maximum of about 110 pips if price does that. And in addition to that expectation, look at this trend line here where price has broken. You know, from a theoretical standpoint, price is likely going to come back, retest the structure in an attempt to continue that uptrend move. So we will not ignore the potentials of sellers too around this area. So how do we navigate this today? Well, let's look at buying or adding to this buy position if price breaks out of the 2,655. Now, I don't want to spend too much time if price break out of the 2,655. If I can see about 20 pips, 25 pips, I'll move my stop loss to break even. I don't want to risk anything around this area. So let me place a buy stop order above the 2,655 right away. Let's do that quickly. And let's see how that will play out today. Let's see how that will play out today. Okay, so I just did that right now. So where will our stop loss be if price ever breaks out of that structure? So we are looking at 2,651. That's about 35 pips of stop loss, 2,651. And my TP target still remains above the around the 2,670. 2,670. So you'll see the figures, you see the price reflected on the trading panel at the bottom of your screen. In case you didn't get my narrative. So that is that on that one. Now, in terms of selling, what do I want to see here that probably I could take advantage of a sell back into the structure? We never can tell. Anything could happen from here. So first of all, I can't find any structural details that support selling idea around this area. At least I want to see something like a double top structure. That would be on the lower time frame, since we are not scalping for challenge in about an hour 30 minutes or 2 hours from now. So if you're a go challenger, stay tuned in. We will be scalping this market together today. I would like to see a double top structure, head and shoulder pattern around this area, then sell the breakdown of that neckline if that happens. But since we don't have anything like that around this area, I would not want to do such. So instead, I want to look at the possibility of this double top structure here. So I will be selling the breakdown of the 2,651. So I will place a sell stop order below that structure. Let me do that right away. And if I can find some sell signal later in the day, I could do that. But at the moment, let's place TP target at 2,644 right inside that demand zone. And where will our stop losses be? Above the around 2,655 we'll just do. And let's see how this is going to play out today. So place the sell stop order already right below the 2,651. So place this place the order already. You can see it in the trading panel. So let's see how this is going to play out. So let me explain again what I'm looking at. I'm looking at the possibility of price coming back to retest the structure right in that temporary demand zone in an attempt to continue an uptrend move, or price breaking out of the 2,006 for hours to continue that uptrend scenario. And I also went on to say that if you still have your buy position running, kindly move your stop losses to secure the current buy position, which I have done on my own end here, and I hope you do the same too on your own hand. So we shall be scalping this market today. Looking forward to see you in about 2 hours from now. Let's see if we can run some things from here. Scalping the market was not that good, as the market was very indecisive, but today let's be hopeful that we can gain something from this market today. So I look forward to seeing you in about 2 hours from now. So that is my simple view on the XAUUSD, everyone. I hope I made some justice to it. If you have any questions or clarifications, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. See you soon. All right, everyone. I guess in the okay, I just saw a comment from C40. C40 says, when looking for a reversal pattern, what is your preferred time frame regarding reliability and noise? I guess I just explained that in a couple of seconds ago. Now, in the case of, let me bring back again. So, in the case of this XAUUSD scenario, it depends on what type of trader you are. Let's put that into perspective. If you are to be looking out for your reversal setups on the 1 hour time frame, and if you are a scalper, you want to be looking out for your reversal setups on much more lower time frames like 5 minutes. And if you are more between scalping and swing trading, like a day trader, 15 minutes time frame will be reasonable to look out for these structures. Okay, so it depends on the type of trader you had that will determine out for structural details. And for the Forex Morning Mastery, we are more of a swing trader as we tend to hold on to trades for more than a day, even a week, depending on how price action has moved. So we personally, we don't go lower than the 15 minutes time frame. All right. So I think that is quite understandable. If you still need some further clarification in the comment section. So I guess we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I think we spent over how many hours now? I guess over an hour, 30 minutes, I think. And it has been wonderful as we went through all of the assets we monitor in the. If your risk is reasonable, you will be willing to continue to follow your analytical approach. But if your risk is too much, you realize that it will tire you out, and by the time the trade finally goes your way, you will lose out on that opportunity because of the fear that you may lose again. So try to risk as little as possible. I see you, C40. You're very much welcome. So that is that for today's trading session, and I do hope you marked out the structures as we have illustrated today, as they are going to be necessary for your independent trading decision. So well done to you if you have done that. And for those who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning, and I look forward to seeing more of you as we jump into the final trading day of this week. That's on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC. So it's on this note I would like to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.